We're joined this morning by a very special guest, Laurence Balanco of CLSA. Laurence, thanks so much for taking the time. Unprecedented uncertainty on the global stage. At this juncture, what we're focused on, we're most interested in is your latest note in which you're saying that there's a return of TINA and that India is looking more attractive than it has in the past. What are you seeing that is encouraging, and why are you saying there's a return of TINA?
Morning. Yes, I mean, if I look at the India price action in particular, there's been a few improvements, not just the past week, but if we go back just over a month ago, we had our first thrust signal for the Nifty. And what that means is we look at the percentage of stocks setting new 4-week highs. And when we get above the 55% threshold, that triggers that thrust signal. So we actually had that develop through March. And with the tariff sort of headlines that you had at the start of April, we obviously saw a pullback in the Nifty. But interestingly, that Nifty pullback just retests the March lows to give us this double bottom pattern. And then since then, we've broken above the 200-day as well as the March highs to confirm this basing process for the Nifty index. And that breakout gives us an upside target of 26,000. So that's in a nutshell what we're looking at from the Nifty. But it's not only India that we've seen breakout recently. We look at Brazilian small caps, we look at Brazil itself, as well as Mexico, and we use the ETFs to put it in dollar terms. We've also seen base breakouts in those markets too. So selectively, we started to see breakouts in other emerging markets.
Right. Laurence, good morning. This is Hiral on this side. When you're talking about Nifty moving above the 26,000 mark, on a technical basis, 26,333 is what we are watching out for. Would it be right to say that, number one, the worst is over for India? And two, if you have to compare India to China, where would you put your bets on? Where is it? I mean, which market is attracting investors currently? Because one, we're talking about valuations. Secondly, the impact in terms of the US-China trade war as well. So a lot of external factors for both these markets. So one, factors that would lead India beyond 26,000. And secondly, India versus China.
Yeah, so from a longer term side, we've had a long-term upside target for the Nifty of over 37,000. So we think from a secular bull trend side that the Indian market, despite the pullback and correction that you had from the September 2024 highs, remained intact. And, the double bottom pattern, the breadth thrust signal that we've seen through March and April does give us evidence that the decline that you've had of the September 24 high has bottomed, and we should look for continual rating back towards the highs that you made in September and likely higher. From a longer term aspect, we think we trade, through that high and ultimately by the end of this decade, that upside target of 37,000 plus is still our longer-term profile. Now, the India-China relationship, if we go back 2 years, was very much a cyclical trading range that we had these periods of India outperforming China. But what we've seen over the past 3 years is actually India relative to China ratio broke out of that 10-year secular trading range pattern. So again, just with that longer-term structural breakouts and uptrend in the Nifty to 37,000, while we will see India on occasions underperform China, from a longer-term basis into the end of this decade, we think ultimately India outperforms China in relative terms at least, with periods of China coming back with rebounds that we obviously saw late last year as India pulled back in China rally. There will be bouts of that, but just from a longer-term angle, the 37,000 plus upside target for the Nifty, as well as the more cyclical range that we've seen in China, should see India outperform.
Laurence, hi, good morning. Mahima also joining this side. In your note, you've also mentioned that two sectors that you are turning bullish towards is private banks as well as the PSU pack. Just wanted to know your perspective as to what are the factors that are leading, to your view, plus what are the counters specifically where valuations look attractive to you right now and you would go ahead and buy?
Yeah, look, we've been positive on the Indian private banks through the fourth quarter of last year and continue to remain that way. Banks, the broader banks index in the Nifty has been a leadership sector since September last year. So even through the sell-off, the private banks fell less than the broader market. And in the rally that you've seen from the March lows, they've outperformed. And HDFC and ICICI have been two stocks that we continue to sort of flag. ICICI has been more of that consistent trending stock, where HDFC, having done nothing from 2021 through to late 24, has finally broken out of a multi-year trading range. And we think there's still significant upside and re-rating for HDFC Bank. So we think any pullbacks in those two names, you want to keep on accumulating. The longer-term trends for ICICI is intact, and the HDFC breakout from that multi-year trading range suggests meaningful upside. So we'd want to be buying pullbacks there. And yes, PSUs, the broader PSUs, not just the PSU banks, they've been the key driver to the derating of the broader India market since the September highs. But this is the first time that we've seen evidence that that sector has based out. And most recently, we've seen a breakout of that downtrend channel from the September highs. So we're starting to see more participation other than the private banks, which were the initial leaders. So we think participation starting to broaden out in the India market, and the PSUs is the next sector that's joining on the upside. So, all right, electronics has been one that we've highlighted, and RECL is another one that we've highlighted with their breakouts last week. So again, we'd look at pullbacks there as buying opportunities.
Right. Laurence, one question in terms of the banks. You have been absolutely positive when it comes to the private banking space. You have been recommending HDFC as well as ICICI as well. But when you talk about the PSU banking space, how positive are you in comparison to private banks? Because I know your note did mention that this is a sector that you've started looking at now. So, private versus PSUs, where would the bets be, taking the current price action into consideration? And what would your top picks be in the private banking space, PSU banking space?
Yeah, so I think it's a great question, because if we look at the highlights that we've been making on the private bank side from the fourth quarter of last year, is that we thought that private banks relative to PSUs made an important low, having underperformed the PSU banking sector for the past 4 years. And we only, we think in baseball terms that, we only in the first few innings of that rotation trade. So from a longer term aspect, I still think private banks over PSU banks. But the points that I'd make on the PSUs as well as the PSU banks is that the downside risk is now limited. And for example, SBI Bank can trade back to its September highs. So I don't have any sort of new evidence that we can trade above or get upside targets above the September highs for State Bank of India. But the breakout that we saw last week in State Bank of India suggests that we can at least trade to the September highs. And I think the importance of that is that, we now have more participation in the recovery rally in the Indian market. It's not just private banks, if we focus on the bank space itself, but we're starting to see a recovery in the PSU banks too. But the longer term answer to your question is prefer private banks over state banks.
Laurence, I'm going to widen the scope just a tad bit once again and talk about the implications of a potential US recession, which a lot of people seem to be saying is certainly more likely than it was earlier. And if that happens, of course, you're talking about India resilience, and you've mentioned the sectors and the stocks that you feel are attractive even at this stage. But then will there be more opportunities beyond just these in the event of a recession down the road? How likely do you think that is?
It's quite interesting. I think, speaking to a lot of international investors, and this is not just the emerging market fund managers that we often speak to, there's now global fund managers that are looking at least initially, the large cap stocks in India as alternates as they reduce US exposure at the end of the day. So, my communications with global PMs is that they're starting to look on an international basis, and they're going through markets, where there is liquidity, where there's places that they can start to put investments in. And India does come up on that list with clients that haven't looked from a global allocation perspective at India for some time. So I still think, that's a potential if US does go into recession. Now, I think, the depth of that recession, and as if we do get a liquidity crisis in that recession, markets tend to go to a highly correlated environment when you do get those deep recessions and liquidity events from the US side. So unfortunately, if that is the case, the drawdowns that India won't stand alone in that environment. If you get a deep recession in the US, that is accompanied by liquidity events. But if we get, a grinding move lower on the US side, then I definitely think there's a chance that India can continue to produce relative outperformance and absolute outperformance. And I think, the participation from stocks in India is likely to increase, as we continue to see the current uptrend develop further. That's the natural course. You get selective initially on the rebound, and as that trend develops, it does get more broader base. And my highlight of the PSU sector, broader sector, is one point of that broadening of participation in India.
Right. Laurence, while global uncertainties, are rising, overall global equities are also consolidating, and investors are turning towards the safe haven asset that is gold. And we've seen that up move in the gold in the past few months as well. In terms of your view with respect to where gold stands, and any targets that you've seen with respect to where technicals are concerned?
Yeah, I mean, interesting. We highlighted that the setup for a blow-off top was there, and we were looking at a 3,450 to 3,500, and that was based on getting back to the 70s of when gold does trade at a 20% premium to its 200-day. We tend to see an overshoot to the upside, and that average premium that it trades to its 200-day gets up to 27%, and that's what we saw at the most recent highs. Now, what we tend to see that follows that kind of blow-off move is a multi-month consolidation pattern. So I think going forward, what we should look for gold, and I think this will be still positive on the longer term side, is a pause and a pullback. And there is risk in the near term that gold can pull back just below the $3,000 area again. But I think for longer term investors, sub 3,000 is the area to accumulate a gain. And the next target would be a 4,000 plus level. But right now, we're working off and consolidating those accelerated advances that we've seen over the past 2 months.
So apart from the private banks, the PSU companies that you mentioned, which are the other top picks that you would recommend at this current point in time, taking into consideration any of the domestic-oriented sectors as well?
Yeah, look, I mean, I think I can keep it broad-based, just from compliance side on published reports is, the consumer side, both the staples as well as the discretionary, it's more stock selective than the broad index. So the broad indices of the consumer staples or fast-moving consumer goods in the Nifty's case, as well as the discretionary side, there are individual stocks that are starting to look like they're basing out and turning higher, but it's not showing up at the broad index level as we've seen on the banks and the PSUs. But I think, within the consumer staples side, you're definitely starting to see some basing profiles develop there. And if you wanted to look on the infrastructure side, but again, this falls back to the PSU, something like NTPC has based out, it's broken the downtrend from the September highs, but I'll put that in the PSU bucket anyway.
So thank you so much for giving all those answers so comprehensively, and thank you so much for taking our time speaking with us at NDTV Profit.